Hello? Okay. My name is David Winner, and my company is DLW Business Consultants, and I've been in business for about 13 years. And JP Bader asked me to come talk to you guys about different types of entities. If you're going to start on your own, what entity you should choose. He says maybe talk about retirement and, deal with any accounting issues that you folks may have. So I will start out by saying I'm not an attorney, so I am not going to go into the different legal aspects of the different types of business entities there are, but I will discuss with you what they are and the tax implication. So if you decide to go into your own business, there are several types of entities you can be. You can be an individual, the person who you are right now, and you can just open up shop and do whatever you want to do. You have income coming in and you have expenses going up. You can form a partnership. So there's the two of you. You decided that this Python is really going somewhere and you want to work together, and you come up with a legal agreement between you and you decide what percentage you are going to own of this partnership. Okay? Another type of entity is the LLC. And an LLC basically is a partnership that's incorporated. Okay, so again, we have a partnership here, but you want to put that extra shield out there, okay? A corporation, as we learned way back in our accounting and business law days, is a separate entity to us. So I, as an individual, I'm David Winner, and that's who I am. My company is a separate entity, a separate individual that has a separate identity. I have a Social Security number. It has an EIN number. An identification number. In terms of law, you can sue my business for whatever happened. For instance, we're talking about encryption. You can't sue me, okay? So that's what a corporation does. So an LLC, a limited liability company, is taking a partnership of 2 or 3 or more people and incorporating it. And then you have a regular corporation that we all know. So you have Budweiser Corp, Coca-Cola, any corporations you want to think of. And those are the different types of entities that you have. Here's the man of the hour.
JP. Wow. Hi, everybody.
All right, let's try it again.
Welcome.
Try it again, JP.
Hi, everybody.
Hi, JP.
That was much better.
All right.
Do I need a mic for that, Carl? No.
So from a tax point of view or an accounting point of view, let's revisit each one of these. So you're an individual, all right? So every year, at the end of the year, you get a W-2 if you're working for an employer, and you get 1099 for interest and all the rest of the stuff. And whatever income that you earn, you would show on your 1040, and whatever expenses you have, you would deduct from the income. You come up with a net profit. The net profit is subject to income tax and self-employment tax. Does everyone understand what self-employment tax is?
Nope.
Okay. When you get a paycheck, and if you're in the corporate world, you have withholding taxes taken out, and you have what's called FICA and Medicare, Social Security and Medicare. So they take out a portion, and then the company matches it. What self-employment tax is, it's both sides of that tax. Okay, so currently, your employer takes out 7.65, and the company matches 7.65%. So therefore, the self-employment tax is the 15.3%. Okay, so you would pay that on, quote unquote, the profits of the business as an individual.
So I separate profits. I separate wage income and business.
Correct. Okay, now if you're earning over, I think this year it's $112,000, then the self-employment tax comes down considerably, because they only take out Social Security or FICA up to $112,000. Medicare is indefinite, okay, so you can continue to pay that. Okay? Partnerships, all right, so we're clear on individuals? Any questions? Just ask questions as we go along. That's probably the easiest thing.
Expenses.
Yes?
What is and is not a business expense?
Any expense can be deducted if it helps incur income. Very tough, isn't it?
Yeah.
You need to buy stationery to write letters or business cards to promote yourself. That's a business expense.
Get me to my appointments.
Gas to get you to your appointments, but that we can get into because you can either take mileage or gas. We can get into that later. All right, we'll get into like more specifics after we go through the entities. How's that? Let's get through the entities and then we'll do that. Okay, so a partnership, again, we have two individual people who are in a partnership. They have an agreement, and we'll just say that you two decided you're going to split it 50-50. Okay? So, again, all of this will show up, number one, on a 1065 partnership form, and then the income will be split between you. Again, the income will be subject to income tax and self-employment tax. Okay? So you'll have all your income, you'll have all your expenses, whatever the profit is, divided by 2, flows to your personal returns, subject to income tax and self-employment tax. I'm going to leave LLCs out for a minute. Now let's go to the corporation. Corporation is basically split into 2. You have the regular C corporations. Now those would be your bigger corporations. Again, we'll say, the Budweisers, Coca-Cola, all these larger corporations that are, again, individuals, as I said before. I'm an individual, my company's an individual. If you're a C corporation, the corporation itself is taxed as an individual. And it's taxed at a much higher rate as the individuals are. Okay? So, if you decide to incorporate and you decide to become a C corporation, a regular corporation, you have income, you have expenses, your profit comes out, and you're taxed on that. But the company is taxed on their profit. It does not flow into your personal tax return. All right? Is everyone following me? This is not easy stuff. Okay? If you decide to take out dividends, just like the companies you invest in, okay, and they pay dividends, the dividends are taxed again. So really and truly, if you become a C corporation, you're double taxed. So you get taxed, the company gets taxed on the profits, and if you decide to take a dividend, you get taxed on that.
The company's taxing the corporate rate, and then the dividends.
Are taxed on your individual tax returns.
So it's not capital gains. So capital gains is
Correct.
first.
Capital gains is another story. That's when you sell the business. Okay? So, if you're a regular C corporation, like I say, just like the companies, on the stock exchange, that's what happens. Do you have a question?
No, it's just, I didn't know that if you sell a company, the income that comes in is taxed at a different rate. I'm going to talk to you after.
Okay. Then we have what's called the Subchapter S Corporation. And the Subchapter S Corporation basically is for small businesses, okay? Like us, okay? I think it's 50 shareholders, et cetera, et cetera. And what the government basically says is, you are legally veiled, all right, as a regular corporation, but the profits itself flow to your personal tax return. So again, your company, okay, has income and expenses and has a profit. That profit will flow onto your personal tax return only at income tax rate. Now, when we talked earlier about individuals and partnerships, it was subject to income tax and self-employment tax. But S corporations, it flows through and only is charged income tax. What's the caveat? The government's very clever. They want their money. The caveat is you need to take a reasonable salary. Okay? Just like anyone else, you would issue yourself a W-2 that would show your salary, income tax taken out, Social Security, etc. Okay? The definition of a reasonable salary is very tough. Okay? And it's very hard to define. It's been tested in the courts, it's hard for a judge to say, okay, your business brought in $100,000, what's reasonable? if you had expenses, etc. Is $5,000 reasonable or is $50,000 reasonable? You have to justify it depending on your business, okay? If this is your full-time job versus your part-time job, etc. My rule of thumb, what I tell my clients is, whatever your profits are, your bottom line profits, at least half of it should be. I'm very conservative, I really am. I don't like the IRS. All right, I really don't. And I would rather pay a few extra dollars and avoid an audit and avoid them being, knocking on my door. And that's just me. I'm not advising you, I'm just telling you who I am. So I always advise my clients, when you look at your bottom line or your anticipated bottom line, pay yourself out over a period of time, half of it to salary, and take the other half as what we call a dividend to shareholder, which is only subject to regular income tax. Now let's go back to the LLC.
Can I ask real quick?
Please.
What corporate structure do you use?
I use Subchapter S Corp.
Okay. So
Okay.
for your, for the income or the salary that you pay yourself, what
Yes.
percentage are you using?
I use 50%.
Okay.
Yeah, half of it's salary because I just find that's the best rule of thumb.
Okay.
I feel that I can justify that.
So you pay half yourself as salary, the other half you pay yourself as dividends. You
Correct.
zero your accounts every year.
You know what? It depends on my wife and what she has spent out for me.
So you can
Yeah, look, the point is this. You don't have to spend it.
Right.
You can still leave the money there. You're still taxed on it. The thing is, with any of these entities, you can have as much money in the bank as you want. You don't have to take the money out, but you're taxed on it.
Right, so if it's in the bank at the end of the year, you had $10,000 last year, you have $100,000 in the bank, pay your company this year,
Right.
$10,000 is subject to tax.
Say that again?
The difference is subject to tax.
Well,
So that was your...
in very simplistic terms.
Okay.
That's very simplistic because I don't know what made up that $90,000. You could have gotten a loan. Okay? So that's why you really have to look at a statement of income and a balance sheet. You really have to create financial statements to say, this is my income and these are my expenses. So if I had income of $200,000 and expenses of $150,000, okay, so what does it leave you? $50,000. All right? You may have $60,000 or $70,000 in the bank, but you're not going to be taxed on that. You're taxed on the $50,000 that shows up as on the financial statement. Okay? You don't have to take it out.
What is that tax? That's a corporate tax, right?
No, if you're a Subchapter S Corporation, it flows to your personal return, and it's subject to your individual tax return rate.
But the money that's left in
The money that is...
Not the money. It's very difficult for non-accountants to comprehend this. No, it really is. Okay, what you have to distinguish what's in the bank and what your real quote-unquote taxable income is. Okay, so let's take that imaginary ledger, the green sheets that I was talking about before that my old boss used to use. Okay, so what you do is you record all your income, okay, and then all the expenses you may have, all right, salaries that you paid out, or office expenses, or gasoline that JP needs to travel around, and then whatever the bottom line is on this piece of paper, not what's in your bank account,
Yep.
that's what you're taxed on.
Yes.
Okay, and that flows, being a Subchapter S, that flows to your personal return, and it's subject to your personal tax return rate opposed to the corporate tax return rate. And most of the times, that's going to be lower.
Okay, so just to run like
Please. Yeah.
So you've got the money, it's in the S-Corp, the income that the S-Corp made was $50,000.
Correct.
You say that flows to your personal income tax, so you add...
Not money in the bank. Let's not talk money in the bank. I know it's hard.
Okay,
Yeah.
so the income was...
Yeah. Right.
Okay, gotcha. So the business made $50,000.
Correct.
Income. Doesn't matter what's in the bank.
Correct.
You add $50,000 to your personal income tax.
Right.
Gotcha.
Now, the thing is, in all honesty, you may have zero in the bank. How the hell are you going to pay the taxes? Right? Because you took that $50,000, we'll say, and you had to buy a new computer, or you had to buy, whatever else, because you're investing in your company. And this is what I have found through the years with companies in a growth mode, where sometimes they have to take a loan out to pay their taxes, because they keep reinvesting their profits, their cash in the bank, into inventory or into computer or hardware or whatever the case may be. So then they have to go and take a bank loan out to pay their taxes. It's crazy.
So what counts as income then?
Pardon me?
What counts as income? Any checks you get in is income.
Any checks you get in for work that you've performed. And again, I want to reiterate that because, like I say, if you went and take a loan and deposit it in your bank, that's not income.
Can I
Okay?
avoid the tax by buying the computer right before I turn in the tax return?
You have to do it all by the end of the year.
Okay.
Okay? No, you can't do it in the following year and go back retro. Let me finish. Let's go through the entities. Yeah, because I don't want to, lose our. Because all right, well, let's get into all the entities. So the final entity, and I know a lot of you, were thinking of, perhaps becoming an LLC and all the rest of that. And again, I am not going to tell you from a legal point of view what to do or not. But an LLC, the IRS basically says, we don't know how to tax it. Really and truly, that's what they've said. We don't know how to tax it. We are going to give you the option on how you want to tax yourself. Now, tell me if that's not strange. All right? So, you have a choice. If you are a single member LLC, that means just yourself, not the partnership that we created here, okay? Then you can tax yourself as an individual, throw it on your 1040. You can tax yourself as a partnership, or as a regular corporation, or as an S corporation. So from a tax point of view, an LLC, it doesn't matter, it's your choice. Okay, as strange as it is.
Once you make a choice, does it stick?
Once you make a choice, you can't change it for 5 years. Okay, because the government doesn't want you taking advantage of all the different things. Now, I just went through, 2 years ago, I went through a client who went from, and I don't want to really confuse you, but from an accrual basis accounting to a cash basis accounting. And 50 pages later, because that's what you have to do to convince the government you can make the change, that's it for 5 years. You can't go back and forth. So the government wants that stability so they can get their money one way or another. Okay? So those are the different types of entities from a tax point of view, again, not from a legal point of view. So let's answer questions on the entities, and then we can just talk about general accounting questions. How's that? Any questions on the different types of entities? God, that was
Somebody
great.
comes to you and all you know is they're going to start a business and they say S-Corp versus LLC. Without going through the whole thing, the 5-second answer. Which one do you say?
Usually I say, go talk to your lawyer. No, I'm serious. Okay? But what I would do is, regardless of the fact I would tax you as an S corporation. So if you really, really want to have that LLC after your name and pay the $500 to get incorporated and all the rest of that, that's fine. But I would very strongly suggest to you that we file the form saying that you're going to be taxed as an S corporation, because for small businesses, that is the best way to be taxed.
So if I understand it correctly, then whenever I'm incorporated, I'm double taxed.
If you're a regular C corporation, you will be double taxed.
The S-Corp.
The S-Corp flows right to your personal tax return.
And if the tax treatment is similar to, I know this is a legal question, but if the tax treatment is similar to like a partnership, then there's got to be a legal advantage having an S-Corp. Right?
Wait, say that again, please.
So the tax treatment of an S-Corp is the same as a personal or a partnership, right?
No. Okay, the partnership, what happens is it flows through to your tax return similar to an S-Corp, but all of it is subject to regular income tax and FICA, self-employment tax. Whereas the S-Corp,
So
you're giving yourself a W-2 income,
Okay.
so only part of it is coming through without that self-employment. And it's a big savings. If you say, let's say your net profit is $50,000 and you're taking $25,000 in salary.
Yeah.
You are saving, so your net profit is only subject to regular income tax. You're saving 15.6% tax on that. That's significant. I wish I had a whiteboard, I'm sorry.
Does everybody have enough water? Just not
Oh, there's a water
Picture
here.
over here with
There
some
is?
cups,
Okay.
by the way.
Yeah, but you have to go downstairs to order beer.
That's fine.
Okay, so does that make sense?
Can think so, yes.
Okay. So individuals, partnerships, everything flows to your personal return and is subject to income tax and self-employment tax. With an S-Corp, only part of it is. And that's where the savings is.
And then, so the part that's not subject, what tax is it?
Regular income tax. So you're saving yourself 15.6% in
I'm
tax.
saving the income tax.
You're saving the self-employment tax
Ah, okay.
On the dividend.
on the dividend portion that you're giving yourself
Ah, okay, because
Yeah.
it's treated,
as income. One way or another, the government's going to get it from you.
So, are there single proprietorship S corps?
Single proprietor,
Single owner.
single owner, yes, I am.
Okay. So you
I would probably say, my gut feeling is probably 50% of the S-Corps are probably individuals.
So you incorporated, and then you pay yourself W-2
Correct.
for 50%.
Correct. So what I did was, when I went into business, I incorporated. Okay, because since I have encryption problems, if somebody wants to sue me, I have that veil now, right? They can't come after me, they come after my corporation. Okay, so I set up the corporation, I got my FEIN number, an individual number, like we have Social Security numbers, and then I petitioned the government to become an S-Corp, because that's what you have to do. And once they grant that status to you, then what I did was, you're right, every quarter I write myself a paycheck. That's just me. I do it quarterly. All right, some people do it half year, some people do it monthly. I'm not saying quarterly is the, some people get paid, every other week. Okay? So, but I'm just saying, this is what I do. I pay myself quarterly, I take out my income tax, I take out my Social Security and Medicare, and I remit that to the government. And then at the end of the year, I have a W-2. The company, DLW, issues David Winner a W-2, just like if we were in the real corporate world. And I show that on my income tax. And then I get a Schedule K-1 from DLW showing the profits. And that reports onto my personal income tax. And then that's how I determine what my taxes are.
Can I ask real quick?
Sure.
Why do you pay yourself quarterly?
That's just me.
Is there any particular advantage to it?
No. See, look, in my business,
The amount of time it takes to write the damn check and all that stuff.
Well, I mean, a lot of it is that, listen, I've put a lot of people, even if they're just one person, all right, I'll put them on payroll. I'll put them on ADP or paychecks, okay, because the reporting is terrible. I'll tell you, I don't do payroll reporting. I refuse to. I do it for myself. I think that's it. Yeah, I don't do it anymore.
Well, so you
I've
know
given
how
it.
to do that. So you know how to figure the 7.25% that goes to Social Security and FICA.
Of course I know how to. Yeah, of
It's
course.
so worth $50 a month to have somebody else do that.
I put him on payroll.
Yeah.
Who you're on paychecks, right?
It cost me more trying to do it myself than for everything I screwed up. And I thought I was getting the wrong 941E versus 941
Yep.
each month and quarter and yeah.
Does anybody here use any of the online tools like Zen Payroll or anything like
It's
that?
like outright, but that's sort of automatic accounting takes from your bank account.
Right.
Does your tax.
So nobody else is using
Sort of
it?
estimated taxes. I use paychecks, so it's not online. Well, they have an online portal. Outright's
There probably are a whole lot of stuff. The only thing that worries me is that they take the tax out, remit it for you, and that they do all the filing for you.
Why does that worry you?
I'm sorry?
Why does that worry you?
Well, because sometimes, depending on where the software resides, do they know to take Illinois tax? Do they know to take unemployment out? Do they file the federal unemployment? Do they file with IDES? I don't know. I don't know.
What would you pay to know?
I'm sorry?
What would you pay somebody else to know that? Because you don't do payroll taxes. What would you pay somebody else, or advise a client to pay somebody else to take care of that?
I guess I don't understand the question. What do you mean?
How much is it worth to you or to your clients?
For me to do it, you mean?
No, to say, in my situation, you said go to paychecks.
I said go to paychecks.
It was worth more for me to not worry about that.
Well, the thing, it's if you are an individual, it's burdensome to do. If you don't make the deadlines, you're penalized, all right? I mean, and the penalty's heavy.
Are you looking for a dollar amount? Like how much per month should you pay for this service?
Yeah.
You know what? Shop around.
Think of your.
No, seriously, yeah. Yeah, I'm saying there's ADP, there's Paychecks, there's a local one called Ovation. There's tons of them out there, okay? Again, talk to people, see, some of the small businesses, who they're using.
Well, didn't you just give an example? I heard $50 per transaction.
Is that what you...
Mine is $50 a month for them to take care of me.
See?
I'm sorry, $50 per month per employee. So
Okay.
$600 a year. And $600 a year per employee, more or less.
We'll go back to my very first client that I was talking about earlier. She did payroll on her own, and she had a business. She had, 10 employees. Never filed on time. After year 3 with me working with her, I sat down and did a spreadsheet, okay, and told her she went to ADP because she was just, she was frightened about all this stuff. She didn't trust them and all the rest of that. Saved her. I'm sorry?
ADP is not very straightforward either. It seems too complicated for a small business.
No, you know what? They've gotten better, and they're online now. I mean, I use it for a number of my companies. They're online. It takes me 5 minutes to do payroll now, with a company of 20 people. Okay? I mean, it gets a little more complex when you're in a restaurant and tips and all the rest of that, but just basic salary. And if it's just basic salary and not hourly, click, you're done. But I mean, I saved her thousands of dollars because she was always in arrears with the government. You don't want that. You really don't want that. You put the money aside and you remit it. Don't play games with the government. Okay? So, before we get into general questions, any other with regards to the different types of entities?
The C Corporation?
Yes.
S Corporation?
Yes.
S stands for Subchapter.
Subchapter S
Or,
of the IRS code.
oh, okay.
How's that? Yeah, when we talk big numbers like 401, everyone talks about 401k. That's the subsection of the code.
Ah, okay.
I know, we don't never think of it that way, but...
What was the other one?
All right, so you're an individual, a partnership. You can be an LLC, or you can be a C corporation, a regular corporation, or an S corporation.
What about an LLP?
Limited liability partnerships are taxed like partnerships. Okay? Like I said, I think you were here with it being with an LLC. You pick how you want to be taxed. It's very unusual. So
I know this is a good question, but
no.
it's a very small one. It's the whole idea of having a corporation is you also get that legal advantage of I can have the company sued unless I'm doing something terrible.
It's a veil. That's right. Again, as I said earlier, it's an individual. You are working for that individual or that corporation. You are an employee. You're the owner, but you're also the employee. Okay? Now, you decided to branch out and you want to lease this place. All right? You'll put it in the corporation's name. Most landlords will ask for you to personally sign as well because they know with these small businesses that if they go, where are they going to get their money from? So they make you sign anyways, personally. You know what I'm saying? Credit cards, when you're first starting out, same thing, guys. When you take out a credit card, remember you're signing on behalf of the company, but you're probably signing something that says you're personally responsible too. Okay?
If I'm very small, they will make sure I use my personal.
I'm saying read the fine print.
Okay.
Okay?
All right. Something I wasn't curious about, and it's related. So I set up as an S-Corp.
Good.
And I do business like gangbusters. It's growing like crazy. Tons of investors come in.
Okay.
Is there a mechanism set up where that needs to become a C-Corp and become something like a bigger...
How are the investors coming in? Are you selling them shares? Or are they lending you money? Or
Probably selling shares.
how many investors will you have?
10.
Okay. Then, based on my discussion, what would the advantage be to change over to a C-Corp?
Well, I guess my question is there ever an advantage? Like, why, everything...
You know what? Yeah, when you become as big as ING, as big as, you know what I'm saying?
Yeah, so is the legal change that happened is like the S-Corp?
There's no legal change. There's no legal change. It's an accounting change. All right? A corporation's a corporation. You go to the state of Illinois and you get incorporated.
Okay, I thought there were different legal
I think
entities.
isn't there a cutoff point between how many employees you have?
I'm sorry?
Isn't there a cutoff point between how many employees you have before you have to become a...
Shareholders.
Sure.
Yeah.
Like Like
Okay?
50 shareholders.
It's 50 shareholders.
So 50 shareholders, if you have 50 shareholders.
That's why I asked you how many you were going to look at. Okay. When you go to the Secretary of State and you incorporate, that's what you're doing. You become a corporation under the laws of the state of Illinois. As I said earlier, then what you do is you automatically become, in the eyes of the IRS, you automatically become a C corporation. Then the next step, what you do is you go to the IRS and you fill out whatever the form number is, 8832 or whatever it is, I can't remember the number. And you petition to become an S corporation. And then they grant that to you. They send you a letter saying, okay, you are an S corporation and can be taxed accordingly. So, from a tax point of view, there will be a change. But from a legal point of view, that's who you are. Okay? Okay.
Can you go through, so your default answer is, what should I be an S-Corp, right? Like,
You know what, for businesses, yeah, I mean, like,
well, can you
for the group that I'm sitting here, and yeah,
Can you go through why some of you might not give that answer for the various choices? Like, why would someone not want to be an S-Corp and go straight?
well, again, I can only tell you from a tax point of view.
Right.
I can't tell you from a legal point of view. And I think that's the problem. Okay, because I don't know why, like I say, most people, most startups like this, they may even become, like I said, they'll become an LLC. A lot of people like it because it looks nice. I'm being honest with you. Okay, having an LLC after you, I don't know, it's fashionable. But I'm saying from a tax point of view, I think for startups, small businesses, I think it's the best way to go. I really do.
So if you form as an LLC, you're applying taxes as an S-Corp, so from a tax point of view, it's the same either way. So really, you're just paying an extra $300 for the entity, common space.
Yeah, I guess so, yeah. Because what is it? I mean, to incorporate as a corporation, it's like $175. I think an LLC is $500. And I think the annual return for a Subchapter S is $100, or a corporation is $100. And I think it's $250 to renew every year for an LLC.
And I know you can't say the legal what it is,
Yeah.
but can you give just like the definition level of what a lawyer would say the differences are on the legal side? Just like LLC is X, S-Corp is X, and that's it?
No.
Okay.
You know what? Honestly, do you have a friend who's an attorney?
Yeah.
Think about it. No, I'm just saying. So you know what? Ask them, and you know what? They'll probably, and if you just define what your company is, they're going to shrug their shoulders.
Okay.
All right? I really do mean that. If it was like a law firm and, you had a lot, different people coming in and, you're taking different personal corporations and bringing them into an LLC or an LLP and everyone wants a different share and a different stake, then you're going to have an agreement that's going to be 500 pages long, and that's the reason why you would have an LLC versus, like I say, you and I. Now that's, okay, talk to an attorney.
So next month we'll try and get an attorney in?
They love getting free legal advice.
Sure, why not?
They love to hear themselves talk.
Yes.
Okay, this is a really dumb question, but like the boundary
No question
case,
is dumb.
No, this is really bad. The boundary case portion of my brain is just really curious now. Okay,
Go ahead.
so you said you can't change, if you're an LLC, you can't change how you're taxed by the IRS but once every 5 years.
Correct.
right? So let's say I'm going to be taxed as an S-Corp, and then 1 year later I get 50 investors. Now I have to be a C-Corp. What now?
Oh, the rules changed.
Oh, no, but how did I change?
Okay, because you are now over 50.
So I automatically got changed.
So it automatically got changed
Okay.
because default.
Okay.
All right, but you can't say, okay, well, see, all right, so you can't say, all right, like as we talked earlier, all right, I'm an S-Corp and now I want to be a C-Corp.
You said you're a limited liability corp.
Choosing to be taxed.
Choosing to be an S-Corp.
S-Corp.
Right, so now you want to choose to be a partnership or a C-Corp
Well,
or
I
what?
want to choose to be
Okay, all right, so I'm saying, if you're over the 50 by default, that's what happens.
Okay.
You have to convert.
Okay, edge case of the edge case. You did your LLC, I started an LLC and then you put common space LLC after your business name.
Yeah.
You get 50 investors, you drop the LLC on the business.
No. How are you taxed? We're looking at two different things. We're not looking at the legal side, we're looking at the tax
I
side.
was just curious if the name of your business suddenly changes.
Why would it change? No, I'm saying you, as an LLC, You can have 10,000. A lot of these big corporations are LLCs. Yeah. Okay.
AWS is LLC.
Who is?
AWS, Amazon Web Services, they're a subsidiary.
Yeah. So I mean, they're out there. It's how you're taxed. Yeah.
Okay, so let's break away from corps and LLC.
Yes.
As a individual
Yes.
or a household, let's say a household, because there's two of us working in my house.
Okay.
At what point and what criteria might I want an accountant personally? Like what might drive somebody to choose, or at what point would you recommend somebody getting an accountant?
As soon as you have to pay income tax.
Well,
How much time do you spend on it? I mean, how do you value?
Well, I don't do anything because my husband does it.
Right.
But
Your awesome husband kicks ass. But, once he starts valuing his time and not just yours, he might figure out, I could be, watching a game or cutting the grass or doing something important. And
Put him to work.
Put him to work, he's more valuable doing something else than trying to figure out tax code.
if you have a simple return, all right, and everything is on a form. So, for example, you get a W-2, all right. If you work for, an LLC or a subchapter, you get a K-1, you get 1099 for interest, you get a 1098 for your mortgage deduction, then you know what, go out and buy, TurboTax. I'm being honest with you. When it gets a little more complex, then you hire someone.
what levels, what are complexities? What are something? So for example, right now, I'm barely touching consulting work because my current job just keeps me busy enough.
Okay.
So, it's just one employer for both of us for the most part. Well, after we change mid-year, technically makes it 4, but
It's very hard for me to say because you know what? It really depends on your understanding of the tax law, on your comfortability with the 1044. Okay? No, I mean, really, that's what it is. All right? Like JP says, I have people coming, they can do it. They can do it and they just can't be bothered, so they hire me. And I have people where, anything beyond, we'll say mortgage deduction, and charitable deduction is just too complex for them. I can't answer that. I really can't. When you find it gets too difficult, or you're not 100% sure, that's when you get on the phone.
I pay my accountant $750 a year. I meet with him 2 or 3 times, and I don't pay him. I stay awake at night wondering if I've done it right.
See?
And that's the...
Yeah, I'm saying it's it's how comfortable you feel.
Definitely worth paying.
I'm sorry?
I said it's definitely worth paying.
Well,
Yeah.
it's hard
Well, you want me to say no?
Yeah, no,
Because it looks like I could save $750 if I
but
just
there's
do
a lot
this
of
shit
time that's
myself.
put in if you're trying to do it yourself.
The problem is, like I say, if it's not the simple stuff, like I say, that you have the forms in your hand, if it goes anything over and beyond, don't play with it. If you're in business, honestly, don't play with it. There may be deductions that you can't think of, that you're not thinking of. Okay? So, other than, like I say, if you're just W-2 and you have a mortgage, you know what I'm saying? But anything other than that, I would seek advice. All right, general questions?
There was a person from the last meeting who claimed that S corporations are more likely to be audited by the IRS
Then what?
than other tax entities.
Well, that might be because there's more of them.
Here's my take on it. We'll go back to what I said earlier. One of the key features with an S-Corp is you need to take a reasonable salary. That's one thing they look at, and that's one thing that could trigger an audit. 2 years ago, I had a company that got audited, called me up,
A client of yours.
client of mine called me up, we're coming to audit. I says, fine. I says, all the records are at my office. They wanted to see the shop, all the rest of that. I said, first question I asked him was, why are you auditing? I need to know this. He says, we're pulling names out of the hat again. And that's what they're doing. this is what we did years ago, and then we became the friendlier IRS. Okay, now a lot of the stuff they can self-audit through the computers, all right? I don't know, once in a while if you get a W-2 and you earned $100,000 and by mistake you put down 90,000, whatever the case, you missed a decimal or whatever the case may be, eventually they catch up to you because they match it all up. Okay, they use with this program called Python and they match it all up. Okay, so within a year you get a letter from the IRS saying, hey guys, you screwed up. The other way around, it could have been that they owe you money too. Okay, it happens, and they'll pay you interest. But they do match up. But they will check certain things like that. And like I say, all they've been doing now is, oh, let's see, we're going to go visit you today. Okay? And that's why, as I said earlier, me personally, I'm very conservative when it comes to taking expenses. They got to be reasonable, and we have to understand them so we can go and talk to the IRS about it. I had another client. She came to me and became my client after she got audited. And guess what? She got $5,000 back after the audit. Okay? She was worried. She had to bring a box full of receipts and everything else. At the end of the day, because they did their own tax return, they screwed up. They got back $5,000. So I'm saying that it happens both ways. So, if you get audited, you get audited. But if you do everything right, you have nothing to worry about. And that's why you hire me. All right, general questions, please.
Yeah, kind of on the reasonable salary.
Sure.
Let's say you set up your S-Corp, paying yourself, $60,000.
All right, whatever. Yep.
And then you get to like a slower quarter or a slower year where
Yep.
you're not making as much.
Then you don't pay yourself as much.
You're allowed to.
Oh, absolutely. Listen,
That would
a salary, if you're living in the real world,
Right.
okay, excuse the expression, but we're all small business. You know what I'm saying, in the corporate world, all right? I go to Bank of America and I'm negotiating and they're going to pay me $100,000 a year. That's what I'm getting, right? Well, if they have a bad year, they're not going to lower my salary, are they? They may fire me, but they're not going to lower my salary. But with small businesses, if you're not making the money, yeah, you take less salary. Absolutely. Well, look, the thing is, say like you're paying yourself $60,000 and taking $40,000 in distribution, in shareholders' dividend. And all of a sudden you're not making the money. Well, why would you pay yourself $60,000 and show a $20,000 loss? Okay? Doesn't make sense.
Wait, so on that, so you start a company, you hire a couple employees to perform the business, you take in $100,000, you pay your employees $100,000.
So you're left with nothing.
So there's zero income that you actually get to account for because it all went out to actual real expenses.
Are you working this, or are you having everyone else work it?
Also working.
All right, you're also working it. All right, go ahead.
And so you don't end up paying yourself any
Okay,
useful salary.
so I'm sorry?
Must be filed as a nonprofit.
You can get away with it for the first year, 2 years,
What's that? What's getting away with me?
or with the zero salary. If you can go to the government and say, listen, I hired these 10 people to help me, but there's not enough money for me, that's reasonable. But if you're making $200,000 and you're showing a $100,000 distribution to yourself, or net profit to yourself, and you're not taking salary, okay? Sure.
What if you're just draining your savings account and you're having fun working these 10 people and they're doing stuff and you're
Yeah.
showing up to work every day, but you just
Did the company make money? That's the question.
I think we're trying to figure out what does make money in.
Okay, so making money goes back to what I said about 10, 15 minutes ago. You take out a piece of paper and you say, this is all the income I earned, and these are all the expenses that I've...
Is the 10 people payroll an expense?
Absolutely. An expense is anything that you have to pay out that helps you earn income. Okay?
So the regular sheet.
Wait, let him finish, I'm sorry. Go ahead.
$1 million comes in.
Yep.
You've got 10, 100K people, so $1 million goes out.
Yep.
And at the end of the year, zero.
Well, that's what he said.
Yeah.
Okay, but if your net income for tax purposes is zero and you took no income, that's reasonable.
And can you do that 4 or 5 years in a row?
You're kind of getting
Is that
dicey.
the IRS comes and says, what are you doing?
Yeah, they'll want to know what you're doing. That's right. Because for all intents and purposes, you are becoming a nonprofit, aren't you? You know, the thing is, look, the thing is, if you're not working it, if you have a full-time job and this is, you created this company for whatever idea you may have had, then it's reasonable. Because if you can prove that you're earning $100,000 somewhere else, I think it's a reasonable argument to the IRS. Okay? But if you're working there 40 hours with the 10 people, and it's year 4, what are you living on?
My wife.
Oh, good luck to you.
Okay, so that case, you got another job that's bringing in whatever money.
Right.
You're shoveling money from there into your business.
So that means your business isn't making money?
Business isn't making money. Do you get to write off whatever you put into the business that the business is losing on your personal?
Okay, so we got to look at this from several points of view. All right, and we'll put on our accounting 101 hat. How's that? Okay. So, company earned this much. Okay. And I'm a developer, so I need to, buy computers, I need to buy pens, I need to buy whatever, okay? So I need to take my money and invest in the company, okay? So whatever I invested and expensed out, notice how I said and expensed out, it creates a loss and you can take that loss, okay? Because eventually you're going to make money, right? And you're going to pay yourself back. But when you pay yourself back, you're making money and you're going to pay tax on it, okay?
When you say take a loss,
Yes.
what is that impact?
So what happens is this loss, if you are a Subchapter S Corporation, flows to your personal return. So if your W-2 income is $100,000 and you took a $20,000 loss out of your Subchapter S company, your net income is $80,000. Your chances of getting a refund from the IRS, pretty darn good.
So there's a real advantage to starting the firm, there's a tax advantage to starting from while earning because then
I'm sorry, starting at...
investing in a firm while I still have a job because then I save that.
If you're investing and, again, investing and expensing it out.
Yes.
So, I'll give you an example. You buy a $10,000 Apple computer.
Yeah.
You can't expense the whole thing out. Okay? It's called a depreciable fixed asset, and it's taxed out over a period of time. Okay? And then, of course, we can get into all the other types of depreciation and all that. Hey, how are you?
Okay, how are you?
Good.
You're here for the freelancer meetup?
Yeah, I wanted to find out a few things. So I don't know if you're doing a presentation.
I am. I'm talking about accounting issues and tax issues.
Okay.
Okay. My name is David.
Nice to meet
And your
you.
name?
I'm Bruce Paul.
Okay. And what do you do?
Me? I'm currently trying to do Python developing.
Oh, no.
There's a lot of us people here.
I have a name for this group.
That's, the name is already taken.
Yeah, what's it?
What is it?
The Chicago Python.
Oh, there you are.
No, remember the thing Cosmin did? Like, screw the presentations, let's just meet and drink beer.
I like that.
Oh.
I'd come every
I don't
month.
remember that.
Yeah, it was the tween meeting, the in-between should be meeting.
Oh, okay. Well, anyway.
All right.
You.
All right. We're just talking about accounting and tax issues right now. All right. Are we done?
I think so.
I know, will you get to talking about depreciation of assets?
Sure. Let's talk about depreciation of assets.
I have a quick question about depreciation of assets.
Go ahead.
We talked about expenses that are annualized each year. My $10,000 Mac computer is a single expense in that year. But that
Right.
asset doesn't depreciate in that 1 year. It's worth a certain amount over the course of a certain span of time, of which the business.
Just move your stick if you don't. Thank you. Let me just move the wire. Sit. I just want to move the wires.
The business gets to write off part ownership or depreciation of that asset, does it not?
Yes. Okay. Good question, and I'm going to confuse you even more. All right. Basic Accounting 101. I have a fixed asset, a computer. What else would we buy? I guess that's really what we would buy, wouldn't we?
Yes.
Huh? Or a desk? Chairs. Okay. Okay, so, I would buy these and they would be deemed for accounting purposes as fixed assets and they would be set up on the balance sheet. You can expense the portion of it. So for an example, a computer will say is good for 5 years. The IRS sets up what the lifespan is of each individual item. The book is that thick, okay? So if you have a horse racing, horse that races, and all the rest of that, it's worth X amount of years of depreciation. You have computers, you have desks, you name it, they depreciate it, and they have a schedule for you. So let's take a computer, and let's assume the government says a computer is good for 3 years. So you take that $10,000, and you can write off a third of that every year for 3 years. That's the expense that you can write off, okay? Because that's the life of the computer. And at the end, the IRS deems that it's not worth anything. You decide to sell it afterwards, then you incur a gain because it has a zero value, and you sold it to me for $200. You incurred a gain on that sale of $200, and it's subject to capital gains tax. Okay? Now, the IRS, I want to say about 20 years ago, and don't quote me on the number of years, decided to help the economy along, okay? And they said, okay, you can accelerate this depreciation, which means you can take more of an expense in a particular year up to the amount of net profits that you earned. Are you all confused? Good. Okay, so I have a company that had revenue of $100,000 and had expenses of $50,000. So I have a net profit of $50,000. I bought a computer for $10,000. Now technically I should depreciate that over 3 years and only take $3,333 of expense for it. But the government said as long as you made at least $10,000, there's a section in the IRS code called Section 125 that allows me to depreciate the whole thing at once. So I can take that $10,000 deduction immediately and lower my taxes.
So is it also possible to defer taking the deduction and say like $0 profit in 1 year, but you're expecting the next year to make?
Yes. Yes, so what you can do, you have two choices. It's a very good question. You have two choices. If you didn't make money, okay, so, I'm sorry?
Repeat the question.
Oh, so the question is, can you defer the depreciation? So you really can do two things. Say like you didn't make money, and you're at a loss. You can still, if you want, you can still take that $3,333 depreciation and increase your loss for that year, for the next 3 years. Or if you really think that you're going to earn money the following year and you want to take that full $10,000, you can defer that Section 125 to the next year and then depreciate the whole thing in the following year. Complex? That's why you hire me. Complex?
Well, actually, I find it
Yeah.
interesting, but it's,
Huh?
this is stuff that I like.
Oh, good.
What's the catch to taking the full amount?
It's all tax advantage, isn't it?
Right.
Why take it over a period of time if,
Right.
why do I pay the government?
But, so can the government stop doing that next year? And just,
You know what? If they do, it will kill the economy. No, I mean it, it will. Because I find, like a lot of small and mid-sized businesses, they look at their profits like December 15th and then they go out and they buy like there's no tomorrow. Okay?
so I've been told that I can write off $2,500 worth of computer equipment this year. I've been told that.
Okay. All right, and I don't know why or, so whatever your accountant told you, then you have to trust him. I can't say yes or no. Do you know what I'm saying?
I didn't know if that was like that thick book that you're talking about with depreciation schedules. I didn't-
Okay, but what I'm saying is I don't know the value of your assets, how they've been depreciated in the past. Is he using Section 125? Do you know what I'm saying? So I can't say other than wow. All right. General questions?
Yeah, so I kind of asked this of the other accountant, and I think he kind of dodged the question a little bit. So, I asked him, how do you know if you found a good accountant? Like, are there any specific questions that you could ask, or if they, depending on how they answer, it's just like a big flag, and you maybe shouldn't go with that person?
Get a referral.
Okay.
No, really, honestly, that's the best thing. I can't tell you when I've taken over the number of accounts over the years, excuse the expression, the crap that I've seen from some of the accountants. Okay? It's embarrassing. I really mean it from a professional point of view. Some of the stuff that they've done, it's embarrassing. All right, talk to people.
Yeah.
All right. Again, as we talked earlier, word of mouth. Talk to somebody that you feel comfortable with. Hey, who's your accountant? Are you comfortable with him? How long have you been using him? How does he charge? Is he flat rate? He shouldn't charge you percentage of refunds. It's against the law. People still do that. All right. But find out what they charge, and it's all a comfort level. What I do is I always have a one-to-one face. I meet with you. I want to know who you are. Because guess what? I'm signing your tax return. Okay? And my name's on there, and I have a liability as a paid tax preparer as much as you do. So I want to know who you are. So it really works both ways. All right? So I have to feel comfortable with you. And trust me, I've turned people away that I don't feel comfortable with. And you have to be comfortable too. Okay? So that's my rule of thumb.
So you can go to jail for screwing up your tax return.
Say that again, please.
A person can go to jail for screwing up their personal income tax returns.
Yeah, well, it depends how bad you've done it. They don't like to throw you in jail. I mean, they'll find the shit out of you, but
But jail is a possibility. What
Yeah.
you're just saying, I'm wondering if a person comes to you and lies through their teeth and gives you a bunch of fake receipts and everything, how much risk are you exposed to?
I have to do what's called the reasonable test too. Okay? So, if say like you give me a wad of charitable receipts, okay, and I add them up and it's like $40,000, right? First of all, you're only allowed to deduct 10%, and the rest, carries forward. But the thing is, and all of a sudden, you kind of look at the receipts and they all look the same or something like that. That's my job to question it, okay? From a business point of view, again, you have to do a reliable test. You have to look at it from a common sense point of view. So, for example, your business earned $10,000 and yet your telephone bill, oh no, I'll give you a good example of something that happened to a friend of mine's partner. He had an exorbitant amount of taxi deductions. He was a realtor. He went everywhere by cab. But it was over the top. He got audited. Okay? Well, the thing is, so if you're going to give me 1,000 different chits, okay, and you earned $50,000 and you took $10,000 worth of cabs, I wouldn't feel comfortable.
Cabs are hard because they don't file that.
No, but I'm just saying in general. I'm saying any sort of expense, if it's unproportional.
Not-for-profit is good. Deductions, most reliable not-for-profits will have if you give them a check, they'll have it in their books.
No, well, you mean as a charitable donation? Then you have to get a receipt after a certain amount anyways. Okay? But what I'm saying is I'm saying when I'm looking at expenses against the income, I do a reasonable test. And if it doesn't look reasonable based on either the industry that I know of yours or just in general, I'm going to say no. And I've done it. I've done it. And I'll tell them. Yeah, I'll give you another example. I had a client works from home. Calls me up. We have an alarm system in the house. I says, great, can I deduct it? I said, no. All right. Well, but 10% of my income, 10% of my expenses are for the house. I says, all right, let's look at this logically. All right, you're paying $40 a month for your alarm system. Are you really want to take $4 expense on your tax return as an alarm and maybe cause some sort of flag? Is it worth the $4? You're paying 20% tax. What are you getting out of it? Let's stop and think about this, guys. So, you know what I'm saying? So it's my job to kind of like check to make sure it's reasonable. Do I go through every single receipt of yours when I'm doing your tax returns? Not my job. Okay? Not my job. Unless you want to pay me to do an audit. And then I have to sign and say, yes, this is reasonable. But all I have to do as a tax preparer is to say, this looks reasonable, I'm okay. Okay? If you get done in for an audit, and I say, it's reasonable, and they say, well, based on what? And I tell them, based on industry, based on this, that, the next thing, I'm off the hook, you got to produce your receipts. All right? Any other questions?
Yeah, so for S Corporation, there's, and this is me not quite remembering.
That's okay.
There's something you have to do quarterly. You have to, it's not like you have to file board meeting something minutes?
We're talking legal.
Okay.
Okay.
Is there another quarterly thing that has to do with taxes though?
Say that again. Quarterly, the only thing, if you're taking payroll, you have to file the quarterly. All
Okay.
right? If you are remitting over $2,500 a quarter, then you have to remit monthly and file your quarterly returns quarterly.
Estimated taxes.
No, payroll taxes. Estimated taxes are completely different.
But you do have to pay those.
You have to pay those quarterly. And they're coming up September 15th. So, okay? Yeah, board and stuff like that, talk to your lawyer. Okay. Any other questions?
Would you buy property right now?
I'm sorry?
Would you buy property right now?
I don't know. It's starting to move, at least in Lakeview where I live, it's starting to move. I don't know. You know.
Get shocked by the interest rates. It's gonna.
Well, interest rates are creeping up again, so.
They're going to climb soon.
Yeah, I have no idea.
Are you accepting new clients?
Sure. I always do. I always do. Any other questions? Comments? Party's over. Thank you very much.